Good morning, this is Robert Sijpesteijn giving you this morning's market update. We'll start today by analysing yesterday's close on the US markets. All indices continued their downward trend from the week before. The US 500 lost 0.57%, closing at 2067.75, its lowest level in 2 weeks. The US tech continued its decline after coming close to its previous high on Monday, which was last reached in March 2010. It closed yesterday down at 4,529.13. The Wall Street rolling continued yesterday closed yesterday at 17,482, at its lowest level since February. General Motors is set to spend $5 billion on a new family of vehicles to push into global growth markets, deepening its partnership with China's SAIC Motor, as the carmaker continues its strategy in emerging markets. Taking a look into commodities, the bearish market continues, with investors concerned about an oversupply in the market and a forecasted interest hike. Gold hovers above its lowest level since 2010, but has struggled to move higher as markets expect the Federal Reserve is closer to hiking interest rates. Gold opened this morning at 1,094.5, with oil following the same trend. US light crude opened this morning at $47.09 a barrel. The US Federal Reserve policymakers begin a two-day meeting today to assess monetary policy. While there's no chance they will raise rates this week, the odds of an increase in September are currently at 50%, according to the median probability in a Bloomberg survey of economists. Coming back to the European markets, the UK 100 rolling outperformed its European peers yesterday, but still closed down 1.13%, following a sharp sell-off in Asian shares over growing concerns about Chinese market volatility and slowing growth. This slowdown is a growing concern for the UK 100 mining and oiling companies, with commodity stocks accounting for 20% of the UK 100 market capitalisation. The volatility in China has in turn caused a pushdown in shares such as BP and Royal Dutch Shell. For the day, the UK 100 has opened at 6,510.8 and is currently up just over 20 points. The Germany 30 continued its fall yesterday, closing at 11,066.1, however started to recover some of these losses in this morning's early trading hours. Deutsche Börse revealed on Sunday they will buy the German-based forex trading platform 360T for €725 million. This will be added to their portfolio, which already contains the US derivative exchange operator, ISE, bought in 2007, and is the first large deal completed by the new chief executive, Carsten Kengeter. News regarding Greece has picked up with recent allegations of a currency plot to make a run on banks by party officials in order to stop the proposed bailout deal. This must be addressed by Greek Prime Minister Alexis Tsipras, with bailout talks set to start today between Greece and its creditors, a week later than proposed. In today's corporate news, Volkswagen has overtaken Toyota to lead global sales for the first half of 2015, selling 5.04 million cars against Toyota's 5.02 million. Orange, the French telecoms operator, has returned to revenue growth for the first time since 2011, as revenues rise by 0.4% in the second quarter to 9.89 billion. BP missed profit estimates, reporting 1.31 billion against an estimate of 1.66 billion. Zurich has said it is considering a potential takeover of its UK rival RSA Insurance. As for the data in focus today, at 9:30, the gross domestic product was released for a year-on-year as well as quarter-on-quarter, and at 3 o'clock GMT, US consumer confidence is released. That's all for today's market update. Thank you and goodbye.